The Aussie dollar has fallen to its lowest level in about 5 years.
The Aussie dollar has been falling for several months.
The weakening Aussie dollar.
The Aussie dollar has had a tough start to 2025, crashing to a 5-year low against the US dollar of just 61 cents. The last time it got this bad, we were stuck at home during a pandemic-induced lockdown. With Donald Trump set to enter the White House, house prices starting to stabilize, and a raft of other worrying macroeconomic factors, many Australian financial commentators are fearing there is significant pain on the horizon. In this video, I'll be sharing everything you need to know about the decline of the dollar. First, we'll be looking at what the falling dollar actually means. Second, we'll look at why the dollar is falling now. Third, how does a falling dollar affect you and your wallet? Fourth, who might actually benefit from a falling dollar, as well as those who stand to lose? And finally, why should you care? We've got a lot to cover, so let's get right into it. First up, what the hell is a falling dollar? Basically, the value of an Australian dollar is often thought of in relation to the value of other currencies. So when we say the Australian dollar is sitting at 61 cents against the US dollar, what we're really saying is that one Australian dollar is worth just 61 American cents. So a falling Aussie dollar simply means we receive less foreign currency, like the US dollar, when converting our single Australian dollar. Think of it like shopping. If the Aussie dollar is strong, you can buy more goods and services from overseas for the same amount of money. But when it weakens, you need more of your local currency to afford those same items. This is why people say a falling dollar reduces your purchasing power internationally. To simplify even further, back in September, the Aussie dollar was worth 69 US cents. Today, it's closer to 61 cents. This might seem like a small change, but that difference means for every Australian dollar you spend, you're getting fewer US dollars in return. Around 10% less to be precise, so shopping and traveling in America has gotten more than 10% more expensive in just a few months. Changing currencies works similar to demand and supply. When the demand for Australian dollars increases, say because of high commodity prices, the currency strengthens. But as the demand falls, as we see now, the dollar weakens. So what's causing the demand for Aussie dollars to drop? There is a few reasons. First, the US economy is booming, and most currency pairs are struggling against its might. The euro is down 8% since September, the pound 9%, the Kiwi down a whopping 11%, and the Aussie dollar down about 10%. So it's not entirely an Australian issue, it's a global one. Positive macro news out of the States has helped propel their currency. The market expects Donald Trump's presidency to boost economic growth in the near term through deregulation, changes in tax policy, and imposing of tariffs. This push to drive more output is not only positive for the growth outlook, but it reduces the certainty of rate cuts, pushing investors to move funds back into the United States. As mentioned earlier, the value of currency is largely driven by demand and supply factors, and the demand for the US dollar is strong. In addition, the economy added a whopping 256,000 jobs in December, 90,000 more than the market expected. Unemployment numbers remain low, with the economy roaring at levels of near full employment, proving the US economy to be highly resilient at this time. Secondly, Australia has seen declining demand for its exports. The sending of coal, iron, and agricultural products offshore has traditionally been a strong sector for the Australian economy. Unfortunately, Australia's largest trading partner, China, has seen a slowdown in its economy. With less economic activity, there has been a decline in their demand for Australian commodity exports as well. Less demand for Australian exports means less demand for the Australian dollar. Third, investors are looking for a safe haven to park their cash. With ongoing wars, most central banks dropping rates, while the US stock market has back-to-back 20% plus gains, investors are moving their funds to the safe harbour of the United States. The Australian dollar is considered a risk-on currency, so when investors seek out a safe haven for their cash, the Aussie and more so the Kiwi dollar see large sell-downs as investors flee back to the greenback. So with a strong US economy, lower expectations of rate cuts, Australia's export reliance on a weakening Chinese economy, and investors seeking a safe haven for their funds, the US dollar has grown in value. These factors increase the demand for US dollars, while increasing the supply of risk-on currencies like the Aussie dollar, causing its value to fall. So what does this mean for the everyday Aussie? Let's look at the pros and cons. On the positive side, a weaker Aussie dollar is great for exporters. If something is worth 100 Aussie dollars, because the dollar has fallen in value, foreign buyers will require less foreign currency to make the purchase. In essence, Aussie exports are now cheaper in US dollars, which might see greater demand for Australian exports like agricultural products, mining, and manufacturing. Australia may also become more desirable to tourists. A weaker dollar makes Australia a more attractive destination for international visitors, as their money goes further when they exchange it for Australian dollars. So Sydney Airport might get a few more travellers from the United States. Over on the negative side, the opposite is true for Australian tourists heading to the United States. The Australian dollar won't go as far, so when converting money, more Aussie dollars will be required than, say, 6 months ago. Imported products will also be more expensive with a weak Aussie dollar, which will have a large effect. Think about all the products we get from overseas, like cars, fuel, electronics, clothing. There are lots of things we import from other countries. Many of these items are priced in US dollars, so when our currency weakens, we have to pay more for the same products. This may cause upward pressure on inflation readings too, as businesses will pass these higher import costs onto consumers. So there are pros and cons of having a weaker dollar. If you're an exporter, tourism operator, or a company earning contracts in US dollars, happy days. But if you're a consumer, as many of us are, an importer, or someone that enjoys traveling or shopping overseas, you'll likely be worse off from these changes. So, should you care? Absolutely, as the value of the Australian dollar impacts your everyday life in ways you may not even realize. Your cost of living, for example, is affected in a few ways. Higher imported prices means you'll be paying more for things like electronics, clothing, and petrol. Even your weekly grocery bill could go up, as many products are sourced from overseas. Not only that, but a lot of things need to be moved around the country before it reaches your store. So it might require a lot of petrol, which of course is denominated in the US dollar. If you're investing in international shares or ETFs, currency fluctuations can impact your returns. If the Australian dollar weakens further, your investment value when converted back to Aussie dollars will be greater, and the same will be true in reverse as well. And finally, the Aussie dollar's value is a key indicator for the broader health of the economy. When the dollar drops, it often signals underlying economic challenges. Staying informed about these trends can help you make smarter financial decisions. Should you panic? Probably not. This isn't the first time the Aussie dollar has dropped, and it certainly won't be the last. Historically, the currency has been lower before, and the economy remains stable. The key takeaway? Understanding what's happening and why is far more important than worrying about the day-to-day fluctuations. Use this knowledge to make informed decisions, and remember, markets go through cycles. The dollar will recover in time. If you found this video helpful, please make sure to give it a like and subscribe to my channel down below. I post a lot of great investing and personal finance tips for everyday Australians, like these videos that should be appearing somewhere over here. Thanks for watching, and I look forward to catching you on the next one. Cheers.